Hello and welcome back. So I'm very late doing this month's video, but there we are. It is what it is. Not much to do about it. I just lost a bit of momentum. I'll get around to it, and the next thing you know, we're over halfway and near towards the end of the month. So I was like, okay, fine. I do lose the odd bit of momentum when it comes to dividend side of things because it's just the same old sort of stuff coming in week to week. I know I'm getting some dividends in, and they're going to vary in value. Especially in a minute, because I decided to cut a load of shares out of the portfolio to try and make sure I had some sort of cash in. Because I figured it wouldn't really be to fund my driving lessons, which is kind of why I took the way I looked at it, because that portfolio just kept going down and down and down. It's like, right, well, I've got money there that is more than the value of the 10% we should have been saving. Yeah, free up some money, there's cash here if I need it, right? And then figure out a way then to actually just fund the lessons that way. So I didn't need to do that in the first place, but it's nice to know I got a grand there if I need it. So there's pros and cons. Anyway, so we kicked off with, actually before we go there, we'll go to interest income, which for April was £33.95. And I've had less funds in the cash holding, hence why this has just sort of gradually come down, but then I was starting to build back up. So I dipped, I think about 800 odd, just less than 900, and then just gradually come back up. So that's why there's been a bit of a drop off in terms of the interest income. Plus they are gradually lowering the interest rate as well. So there we are. So we had 49p from the FTSE emerging markets. That's the equity side of things. FTSE 250 was 18 pence. The UK government gilt was was 69p. Then we had 10 pence from the Eurozone government bond. Emerging markets government bonds, that's the government bond side of the American markets, 41p. Then we had USD Treasury bond for 14 pence. The FTSE 100 was 35, so I'll see them again in a few months. And then the S&P 500 was 25. How nice of them. £10.60 came from VPC Special Lending, which is returning quite a sum of money. So this one was £1.06 for the interest rate. Sorry, but they class this type of interest as for the dividend they pay, right? However, they are going to be returning 15 pence a share in terms of a B share scheme. All I know is that I'll show you a bit now that there's a dividend payout of 15 pence coming my way, which is interesting because the stock is halved by the same amount. Literally halved, and now I'm down 75% on it. And it's like, well, are they doing it to return just a lot of capital they think is necessary, or are they doing it so they can just grow up business? Because if you it's taken the capital loss plus any dividends paid and any cash returned to see if you've actually got a net return there or not. It's one of those ones. I sort of kind of do half change some of the things as though I look at sort of what I see as a tidy enough reason to invest. Yes, I've done high yield dividends and stuff like that, but sometimes it's within an acceptable tolerance of, say, the shareholder equity, right? As long as that's not getting absolutely hammered by a dividend paid all the time, then, it's not so bad. I tend to like for anything that's 10%. If the equity, so dividend compared to the previous year equity is more than 10%, I look at as too high. That's how I can look at it. Because unfortunately, stock prices go up and down. So 1 week you could be within tolerance, and the next weekend you could be nowhere near it. Because week after week, a week just keeps going down and down. So I don't know, it's one of those things. So yeah, that's going to be an interesting one to watch. I know I've got a couple of investment trusts that were winding up, that's fair enough, but this is an interesting one to watch. Because I don't really know what the game is on that one. If you don't know it, get out of it. Real estate credit investments was £33.60. £22 then for regional REITs, which is just regional. Holding £8.40 from Assura. 23 pence from the S&P 500 covered core ETF. Dying here. 25p from the Nasdaq 100 covered core. 7 pence from the income shares gold plus ETP. £3.40 from Valium Index Property Trust. I quite like that one, which does what it does. £1.63 from Global Investment Company. £8.61 from the US short-term high-yield corporate bond index. I've got used to saying that now. 17 pence from the USD emerging market bond. So yes, it's a replica of the one down there with Vanguard, but I might decide to just buy in based on the price these days. And then we've got the global inflation-linked government bonds, which is worth having because inflation is quite a runner in some places. So that gave me £91.77 for the month and £286.74 for the year at that point. So divide that by 4. So are we lucky here? I'd like to see what my average monthly income is. Right, come on. Being slow this. Oh, it is being slow. Oh, go away, come on. I may as well do it on the other one. 286.74 divided by 4. Sorry, this calculator's decided it doesn't want to do much. I think his battery's definitely done. £71.68 and a half penny for the month average. So that's not bad. Definitely not going to be hitting that 1100 quid or grandish for a few years. So with that said, let's have a look at what's going on with VPC. So VPC, for some reason, has decided to return capital via a B share scheme. However, if I look here, there's a dividend being paid to me at 15 pence, which appears to be this V share, for what I can sense, being the case, right? Yeah, I'll keep changing stuff on you guys. Add stuff I don't really realise. So yes, so this is what's going to get paid to me on the 12th of June. So considering I've got 1,000 shares, will this calculator work now? I was going to try and read that and it's not the best. Batteries, it's done this before with us. I think it had very little sunlight. So let's have a look. So we've got 0.15. Oh, don't be so slow. Come on. So I've got 150 quid being returned to me. Which sounds nice, but then this is going to be down by the same amount all the time. I ain't going to move. I ain't going to grow anywhere now. You see, it was kind of struggling. So it could be nice. It came up. Hey, we're recovering nicely, and then they made an announcement done. It's dead forever. Alright. I mean, this spent 3 months or so doing this, right? Here's the yearly, straight down, boom, max. It's never ever going to recover. So I can only assume, it's just me assuming, this will eventually just get either sold outside. I don't know. There was no big scare spooks in the balance sheet. it's a mystery. It's going to remain a mystery. I probably should just better off just throw my money in a bog standard ISA or what have you, and just leave it there. Probably much easier. Anyway, so that's that, and see you all very soon, probably for the May video. So till then, best of luck. Hope you have a much better much better journey than me. And I'll see you probably quite soon, unless I decide to leave it again for like halfway through the month for the May video. Have a good one.